Let's bring in our featured guest, Bill Strazzullo, the chief market strategist over at Bell Curve Trading. So, Bill, we're talking a lot about Dick Beauvais' call. He cut Wells Fargo to a sell from a neutral. That happened about 328. Right after that, we saw stocks really take a hit here. Do you think it's because of this call out of Dick Beauvais?
I think, Carol, it's more what Suzanne talked about in terms of being at these levels, the market's vulnerable. Our game plan really hasn't changed. I was back on the show on August 5th. I said, look for the S&P to make a move to 1,100, 1,150. We were trading around 1,000 at that time. We hit 1,100 this week. I still think you might push the market a little bit higher, 11 and a quarter, 1150 in the S&P, maybe 10,300, 10,400 in the Dow, 2,200 in the NASDAQ comp. But the bottom line here is that the March rally is in the late innings, and you should be much more in the harvest mode. Take a step back, take your profits, and begin to unwind your long positions rather than be aggressive buyers. I think that's why you've seen over the last several days the market has really stalled out in front of that 1,100 area.
Are people getting nervous here? I mean, are we on the edge? Could you see a big drop, do you think?
I don't think, Matt, the market's going to fall apart, but really what it comes down to, at least in our opinion, is that the risk-reward at these levels really doesn't make sense. And by that, I mean what you stand to lose by being long is as much or more than what you're going to make by holding a long position. So that says to us that at the very least, take some profits here, take some chips off the table, and take a step back. And it doesn't mean we're at the absolute high here. I think trying to call the high is a loser's game. You're right once, you're wrong 1,000 times. But what we do try to assess is the risk-reward. And in our opinion here, the risks are at least as great, if not greater, than the rewards of being long. And that's what I think you're seeing here, people coming to that conclusion and beginning to take some profits.
Bill, you think that fair value is around 900 here? Do you think we could go back down to that? Could we go even lower?
It's a good question, Matt. I think the other important thing you got to ask yourself is, okay, if we're right here and the March rally is beginning to top out here, what does the next phase of the trade look like? And in our opinion, what you're going to see is much more kind of a sideways range game where 1,100, 1,150 is the upper end of the range in the S&P. You know, somewhere around 900 is probably fair value, and the lower end of the range is 750, 700. So I think that's what we're going to settle into once this March rally is over. Now, there's a lot of people who look at what's happened since March and think that we're going to basically do the same thing we did in 2002, 2003 after the dot-com bubble burst and go up for the next 4 or 5 years. And in our opinion, neither the technicals nor the fundamentals support that. So we're looking for a little bit more here on the upside to this March rally, but then we settle into much more of a two-way trade.
Hey, let me ask you something, Bill, because you like the retail holders index, and I'm thinking about what Walmart said today. They expect a tough holiday season, and that they see that consumers are going to kind of put off purchases. Why retail, in your view?
Well, Carol, I talked about this on the August 24th show. I said we liked the RTH. At that time, the RTH was trading around 85, and I said look for a move to the low to mid-90s. It's got to, I think, 93, 96 has been the high. So, again, this is like the broader market. I think, you know, what you want to be doing in the retail sector is taking your profits. I think you might push it a little bit higher, but the bigger story here is some of the critical sectors, just like the broader market, are beginning to hit their key target areas. So whether you look, you know, from the top down or bottom up, I think you want to, you know, start to take your profit.
All right, Bill, thanks very much for joining us. Bill.